our second segment of module 3 for life insurance. So today we're going to be continuing on. In the first one, we looked at some key terms. So now with the next upcoming 3 modules, we'll be looking at each type of life insurance individually. So in this segment, we'll be looking at term life insurance. And in the next segments, we introduce a permanent insurance products. So whole life in one segment, and then also UL in the upcoming segments. So when we're looking at term insurance, now just as the name states, this is for a specific term, right? So this is different than the typical insurance products that people might think of. So it has a specific time. You can set it if you want it to be for 2 years, 5 years, 10 years, etc. Based on the need of the individual, they can kind of say, okay, I need this insurance only for this time. And or we can say until a certain age. They can say, okay, not necessarily for 5-10 years. I want it until age 60 or 65, right? So they can specify either the number of years they would like the coverage for, or until a certain age. So that's one of the ways that terms, then they would have to choose that term as well when they're choosing this type of policy. And why this is important, because the premium is going to be highly based on the term that you've selected. So if you selected a shorter term, then your premium will be cheaper. Now, term insurance is already the cheapest type of insurance, especially if the person is younger, because the risk of death at that point is less. So the insurance company is going to charge you based on how much risk are they taking for you. So if you choose a policy for someone who is younger and they only want the policy for 10 years and they're 25, 30 years old right now, then it will be a very cheap premium because they've specified a small term and they're already young. So that insurance company feels we're not really taking on much risk. So the premium will be cheaper versus if they were to get that term for 30 years, 40 years, premium starts to go up, right? So the premium is going to be based on how much time is the insurance company insuring you, and then the premium will be based on that. All right, on the side here, I have some general things. Let me just a little bit closer so you guys can see it. So on the side here, we have some general things which apply to all policies, just reminders. We talked about it in the previous segment, but just quick reminders because it does apply to all. So one of the things is attained age. Attained age is something that the insurance company uses to figure out how old you are. Now, generally, the price is not going to change dramatically if you're 22 versus 23. But the insurance company has age brackets, right? So let's say from 20 to 29 is one age bracket, and then 30 to 39 is another age bracket. So that's where if you're on the cusp of a bracket and you're just kind of maybe hitting into another bracket, the premium can be very different. Cost can go up, right? So cost is usually going up every year, but it might be a few dollars versus maybe a little bit more depending on how old you are. So attained age is important, and there usually is a question on the exam for age as well. So just make sure you guys do kind of look over this in your notes, but we will go over it now as well, just to refresh your memory. So attained age, it can be based on your last birthday. So if you are, let's say the person is 25 now, they turned 24 10 months ago. So even though they're almost going to be 26, but the insurance company says the attained age is going to be on your last birthday. So however old you were on your last birthday, it can be on your next birthday, right? So the upcoming birthday. So even though your birthday might be 10 months away, if they say it's going to be based on your next birthday, so that's what it's going to be based on. Or the most common one we see is nearest birthday. So is it, let's say your last birthday just passed 3 months ago and you're 25 right now, and your next birthday obviously is going to come up in a little bit longer. So they'll go with 25 versus if your birthday is coming in the next 2 months, then they'll make you a little bit older, right? So that will change depending on how they sort of say that. So just as a quick example, let's say Tom bought his policy on August 12th, 2019. So we'll write this as just as an example. So policy was bought on August 12th, 2019, and his birthday is November 1st, 1985. So now if we were to use these numbers, and if we go by his last birthday, when he bought the policy, he's going to be considered to be 33 years old. If we go by his next birthday, he'll be 34 years old. And if we go by his nearest, he will be 34 years old. Okay, so just a quick example to show you how attained age will work. So it's based on when you buy the policy and what are they basing it on, your next, nearest, or last birthday, right? So that will change accordingly. And this applies for all policies, how they get attained age. And the other reminder is the 2-year contestability period. So that again also applies for all policies, that you have a 2-year contestability period and 2 years for the suicide provision as well, that if the person commits suicide in those 2 years, no benefit is going to be paid. All right, so continuing on, so this is reminders for all, and now continuing on with term.